What's up? Mortgage Rate Monday. Today is November 7th. Good to be back. 2 weeks ago, I was at an event. Last week was Halloween. Took my son trick-or-treating. So now I'm back. And let me share my screen here real quick. There we go. All right. So this is rates today. A little bit of a rally today. Again, these are the national averages. Your actual rate and terms and payments could be different from these. So like I said, a little bit of a rally today. What we're going to see a lot of volatility, mainly because we have November elections tomorrow into Wednesday. If we see a lot of red in the election, be ready for the stock market to rally. Don't know if that will actually carry over into bonds. It could, so we could see a small bump there, but I'm not banking on anything at this point. One interesting thing that I was looking at the other day is this here. This is the Case-Shiller index. It's pretty much like the gold standard for showing home price appreciation over time. And you see here in looks like March of 22 to August of 22, which is the last data point they have here, that they've seen appreciation drop from about 20% to 13%. So we dropped 7% in appreciation, which AKA could mean sales price. But this is interesting because when you really think about what this graph is showing, it's showing appreciation year over year, which means that even if this drops to 5%, that would mean that the same home that sold in August of 2021 would still be worth 5% more than it was 5% more in August of 2022. So basically, that would mean a $400,000 house would still be worth 420. Yeah, 420. Yeah, I'm doing my math right. Yeah, 420. So you gain 20,000 a year no matter what, because you're still appreciating just at a lower amount. Now, in the short term, it would look like the market's crashing. Like if you only look right here, like, oh shit, we're about to see another crash like 2008. But if you look at this, you can see here's 2008, November 2008, or yeah, November, when we're negative appreciation, the only real time in history besides back in like the 80s. And then what's funny is you see here in like 2013, the same thing was happening right now, just at a smaller scale, where the government was like, okay, we know what happens when we see this steep line right here. So we're going to go ahead and try to back it down. Okay, so they backed it down, did the same thing they're doing right now, same policy, and then things settled down to around 5%. And then here in 2018, the spike right there, and like, okay, lightning is not going to strike twice here. So again, exact same policy they're doing now, and they chilled things down back to 5%. Then you have this, which is just crazy. That's what caused all of the chaos in the first place. But again, looking over the long term, it would appear, now I have no insider information. This is just me observing graphs and stuff like this that I look at. It would appear that the Fed feels comfortable at an appreciation rate of 5%, roughly. That looks like about like the average across this time frame. So that would mean that they're going to stay hard on their current policy of controlling inflation until price of goods comes down, price of labor comes down, and home prices get back around what would look like this 5% range. So again, in the short term, it's pretty chaotic because you see who knows how fast it's going to drop to around that 5% mark. And maybe if it goes lower, maybe it goes back down to this negative again. But it sure seems like they've gotten smart enough now to the point where once they hit this threshold right here, they'd be like, okay, let's back it all down. Let's kind of open things back up again, stimulate the economy a little bit more. And then now things could settle out and be almost like a soft landing. Anything can happen. Again, I'm not a fortune teller. I just look at trends and I try to find patterns. And it would seem, just off what I've just looked at, that the pattern would be, that's kind of what it points to. So we'll see what happens. But like I said, a lot of volatility in the next couple of days because of elections. After elections, there's no reason for rates to come back down. Probably going to stay bouncing around that 7% range. I've heard some people say they're going to hit 10. I don't see that. I'm not saying it's not possible. I just don't see that. Maybe 8, I would say, be the ceiling. And then, in probably halfway through next year, I think we'll probably start seeing the creep back down. But, again, anything can happen. I don't have a crystal ball. That's just my 2 cents on the subject. So thank you guys for watching. I will see you next week.